What's up, everybody? Welcome back to Financial Freedom Friday. It is episode 15. We're going crazy in the building. With me, as always, my best friend, co-host, Mike Oakes. Mike, how you feeling?
Great, everybody. RV park living here, but it's a beautiful day in South Carolina. Had to bring the podcast outside, but hope you all are doing well. We got some great stuff on buy and hold for you today, which we have the luxury of having one ourselves. So, Paul, let's kick this thing off, baby.
Yeah, so first of all, buy and hold is kind of like the senior of everything when it comes to real estate investing. So we like to make the comparison that when you're wholesaling, you're a freshman, right? You're kind of starting off, you're getting your feet wet, and you're like, wow, this is so amazing. And then I would say, like a sophomore is like that person that's just getting into fix and flip, and they're making a bigger return. And then I would say a junior is when you're scaling, right? You're doing all these big things. You're doing a lot of fix and flip, a lot of wholesale. And then I would say the senior is when you're buy and hold, right? That's the ultimate goal for all of us, is to own real estate so that we can kind of get that all the benefits that come with it. So we wanted to talk today about a property that we actually bought, and we hold it in an unconventional way, which I think is really interesting, and we haven't really highlighted it. So Mike, kick us off. Do you want to explain the property that we have?
Yeah. So first of all, buy and hold, exactly like what it sounds like. You can buy and hold cash. You can buy and hold creatively. We picked a creative strategy that is in Maryland. It is a property in Waldorf that we actually bought it from somebody that eventually became an employee of ours. Which he has now gone on to different opportunities. But we found the deal through networking and having another employee on our team that was actually working with this guy, and we bought it, and it pays for the whole overhead of our business. But basically, it's a $450,000 house that we got a wrap on that. If for anybody that doesn't know what a wrap is, go back to our previous videos. We got information on that. And if not, we can make a whole thing about it here. So let us know down in the comments you want to learn more about wraps, creative strategies that we use. But the benefits of it is it pays for our whole overhead of our company. That is no joke. Every month our company's bills are paid due to just one deal. Imagine having 5 of those. You never have to work again. But Paul, I'd love to hear your thoughts on the deal that we got and anything that I might have missed. So let the people know, brother.
Definitely. So I think when a lot of people hear the term buy and hold, they think of, I go to the lender, I go get a mortgage, and I buy it. Maybe I'm putting down 5% if it's like an FHA loan, or if it's a conventional loan, I'm putting 20% down. And that is kind of the way that everybody was taught buy and hold, right? That's the traditional sense. But we learned through Jerry Norton about buying and holding notes, which is very interesting. So we essentially acquired this property on a subject to transaction, 3% interest rate in 2023, right? Which is crazy. People are buying houses at 5 to 7%, and we got it at 3% last year. And so we were able to buy it on Subshoe. So we didn't use any of our own credit. We didn't use, we didn't have to go jump through the hoops of getting qualified with a mortgage broker. And so we were able to buy this property, and then we double closed on it and sold it on a wrap, which is very basically put, it's taking the existing terms and just wrapping our terms around it. So think of it like a Christmas gift, right? Let's say you get your significant other a gift, right? And then you put your own wrapping on it, and that's what makes it yours. It's kind of like that. So think of the house, the 3% interest rate, all the debt that's already associated with it, that's the present. And then what we did is we said, hey, we're going to add a little bit of interest, right? So instead of them getting it at a 3%, we're going to sell it at 5%. So we're making 2% spread on all of the profit. And then we obviously added some more cash flow. So I think we got it, I think it was about $2,200, and they pay $3,500, right? So we're cash flowing a bunch there. And so what it turned out to be was in one deal, we didn't use a traditional mortgage, and now we cash flow a couple $1,000s on it every month just off one. It's crazy. And we have no liability. We're not responsible if the toilet breaks or they need a roof replacement or any of that stuff. They are held responsible. They hold their own insurance, and it's a really cool
Yeah,
thing.
exactly. It's something that we didn't know about for the longest time when we first got into this, and then Pace, Jerry, all those guys. Shout out to them for dropping all that free knowledge that for us to all learn and take advantage of.
Yes.
Um, but yeah, the only thing that we did wrong, I guess you could say, is we used our own money. We didn't know that you could use gators, you could use people that are doing transactional lending that we did not understand. And we honestly, the things you don't understand are the things you usually stay away from. So we learned about it. We've used different gators, PMLs, things of that nature recently. That it's all about relationships in this business. So the more people that you can connect with, and further, just relationships with, you'll end up doing a lot of business with. So just keep that in mind, that whenever you're at a meetup and you're nervous or you don't want to go talk to somebody, they are probably the ones that is holding the keys to your future. So go get it.
Yeah, exactly. And kind of going back to that traditional sense of buy and hold, there's a lot of really good benefits that come to it. We've already touched on the cash flow. I think everybody kind of understands, right? You try to shoot for at least $1,000 in cash flow. You're gonna have to have some holding costs, some expenses that kind of pop up, but overall, you should be able to cash flow, right? So appreciation is something that we want to talk about too, right? And this really doesn't apply to Mike and I's situation because we sold it on a wrap. So we don't technically own the property anymore. We just hold the note. So appreciation is a very beautiful thing that is, I think, unique to real estate. I don't know of any other asset class where you have this level of tax implications and tax breaks from the government. But essentially, it's anytime you're holding real estate, it obviously is going to go up in value, and that's what we call appreciation, right? So let's say you buy it 300,000 and you wait 5 to 10 years. Typically, it's like at least over the past 10 years, it's doubled, if not tripled, if not quadrupled. So that $300,000 investment is probably worth anywhere from 6 to 900,000, which is crazy in 5 years. Go buy a stock. You know what I mean? It might go up that much, but it's confirmed. It is always confirmed that real estate will go
Exactly.
up. It's a roller coaster, right? There's ebbs and flows, but you're always going to have appreciation, which is such an interesting thing because you can't get that in any other asset class. You go buy a mega yacht or you go buy a Rolls Royce car, all of that's going to depreciate. But real estate will always appreciate. It'll always go up instead of going
Paul,
down.
the only other things I could think of, wine and art, but it's the only other two, right?
Yeah, that's true.
But hey, they don't make
Yeah.
the same quick returns as usually with paintings and art, you gotta wait 15 plus years, so you might as well just go get a bond at that point. But but yeah, it's really cool what you can do and what we've learned. So if you have questions, if you have things you want to know, let us know, folks. Comment, like, subscribe. We want to provide as much value as we can for you. And our buy box, if you have deals, we're looking for anything that's above 450 cash flow. That's gross, obviously, cash flow. If it's under that, net wise, you're not cash flowing. I'm going to state that one more time. Write this down. If you get a deal that is under $450 gross cash flow, you do not have a cash flowing asset, because when that pipe breaks or when that water heater goes, all of that money you just made is going there. So make sure you do your due diligence, do your underwriting, reach out to people if you don't know what you're doing with underwriting. We've done it. We ask people all the time, hey, does this make sense? We think this is right, but you're really in this market, like heavy in this market. Let me know if this is right. Don't be prideful. We all want to help. We all want to make everybody businesses grow, because everybody needs to eat. So let us know how we can help in any way, shape, or form.
Yeah, absolutely. And kind of the last piece I wanted to touch on was wealth building over time when it comes to real estate, right? It's uh it's crazy that you can go and purchase property using creative finance. You know, you can literally take over someone's debt and just make payments for them. And you could do that a couple times, 4, maybe 5 times in your lifetime, and you could be set because the real estate is always going to appreciate. It's always going to be worth more. You know, there's going to be some holding costs. You're going to have to fix roofs and put in new water heaters, but you're going to get to a point where the income that you're producing from those assets will greatly outweigh whatever you're making at your W2 as long as you stay consistent at it. So let's just break it down one step further. Let's say over the next 10 years, you bought one property using somebody else's money, leveraging somebody else's debt. It will now pay for your entire life. You have to do that once every 2 years in a 10-year period, right? Or if you really want to speed it up, do one every 5 years, right? And you could be financially free. That's crazy. You just have to buy 5 properties and you could be financially free. You never have to work again. You can travel the world. You can do all the things that you want to do and you don't have to answer to anybody else.
Exactly. Yeah, it's crazy. It sounds illegal, but believe me, folks, it's not. You can go check the guidelines in any like Fannie Mae. I don't think it's in Freddie Mac's, but I know it's in Fannie Mae's. It says it right there. You can do all of this. So for any of those naysayers, we love those haters, so keep them coming. But yeah, it's something you can do and learn like easily. It takes time and it takes practice, but you just got to make it happen. And the cool thing about the way we do this is when you're selling this, like you're going to sellers or you're going to agents, we basically come in and say, hey, we want to partner with you, the seller, on this house because we're going to come in, we're going to fix everything. And guess what? We can sell it for a little bit higher for that number that you want. So you can even put, like, in some cases, this isn't the best way to do it, but you could put a year balloon on it, right? Because you're going to fix, flip, and sell it. You already know that's your exit strategy. As long as that's your exit, you can do that. I know somebody down here that does that. Shout out to Angel down here in South Carolina. He does that a lot. So that way he can get in, get the property done, doesn't have to use a hard money loan or a hard money lender where he's losing more and has to pay more on the back end to that, obviously, loan. So it can honestly be a great way to partner with sellers, come in, take it over, and then sell it back out. Everybody wins. So if you have anything else you want to know about, hear about, reach out to Paul and myself. I'm Mike's REI Roots on Instagram, and Paul is at Paul's Investing on Instagram. Pretty sure it's Facebook. We're on TikTok. The links will be down in the description here, but comment, let us know what you want to see, and we'll see you next week.
Financial Freedom Fridays, baby. Woo!